Let's take a look at a few other things that you guys should be looking at for your final paper. Um, Good things to add maybe to the financial section, of course. That's what we're going to be looking at now. Um, One of them I started to look at, I kind of wanted to make a point for everybody to really watch the equity accounts on the balance sheet, because those can sometimes have some big changes that are really kind of meaningful. But as I went through the list of the companies you guys selected, I didn't see anything that jumped out. So I'm going to spend a couple minutes talking about it anyhow. I didn't look at everybody's company. I kind of probably looked at half of them. And so you guys should all take a look at your accounts, and let me show you what I'm talking about. So this is actually Apple. Go up here and show you APL, Apple Link. Yeah, I know that Apple aggressively buys back its own stock. And what does that mean? Well, companies often, in Apple's case in particular, they start accumulating cash. And what do you do with the cash? Sometimes acquisitions, sure. Apple's bought some other companies. Microsoft's another company that has a lot of cash, and they've bought other companies, definitely. Okay, but at some point you kind of take a look and you say, maybe there's no other company that really fits, and we don't want to extend our management. We don't want to, do other things. And so they can pay dividends, and Apple pays a dividend. Okay, I believe. I know they do. It doesn't show it on there. I'd have to go look a little bit further. But so they pay a dividend, but sometimes shareholders don't want dividends all that badly, because guess what? They have to pay taxes when they receive those dividends, unless they hold that stock in their IRA account or accounts. And so another thing that the companies can do is they buy back their own shares, right? And so that tends to enrich the people that hang on to their shares. It certainly enriches the people that sell their shares back to the company. They get their cash, but the people that hang on to the shares then they have own a bigger percentage of the company. If a company has 100 shares outstanding and they buy back 10, then there's just 90 shares outstanding. Now, that doesn't automatically make the stock value go up by 10%, but in a sense, over time, it probably will, because the company's ability to generate profits into the future isn't affected by buying back stock. If they've just got excess cash, it doesn't affect their ability to buy back stock. So, we take a look at Apple. I'm sure this is probably in billions. Their weighted average shares outstanding, just going back a few years. What's that? 20. Yeah, it's not going to tell us, but so we've got 20. Shoot. I think this is trailing 2021, 2020, 2019, and their basic average shares outstanding. And this is on the income statement, right? Okay, is like 18.5 billion, and now they're down to about 16.5 billion, and that doesn't look like much when you look at it like there. But try to buy back $2 billion worth of, or 2 billion shares, I'm sorry, of Apple stock that's worth $160 a share. That's a ton of money, okay? And Apple still has a ton of cash on its balance sheet, okay? And Apple's not a company that anybody selected, because I had to pick one that showed this in the account. Now, where else should we see that? Well, we should see that in the balance sheet, okay? And we got to come down in the balance sheet. Goodwill, total liabilities, deferred liabilities. I'm sorry, got to cruise on down here. Total equity, right? Okay. Hang on a second. I'm going to pause for just a second. Sorry about the pause, but where we see that here is getting down to the total equity, okay? In this case, okay, they've bought back stock, which it absolutely lessens the equity that particular company has, okay? And you can see that fairly dramatically here. Again, this is book equity. It doesn't really take into consideration what a company is actually worth on the marketplace. Two different concepts. Try not to get those confused. There's accounting equity, or accounting bookkeeping, I guess, and then there's what the market thinks it's worth, which is what we see in the stock market when we buy, sell, and trade those particular stocks. Okay, I'm going to talk after this. I'm going to shut this one down, but I'm going to talk in another video here shortly that I'll put out today too, on looking at some of the ratios and whatnot that are really, really important. Sign off for now. Thanks.